If your business was negatively affected by COVID-19, it is possible you may qualify for the Employee Retention Tax Credit, ERTC. The qualifications to claim this credit for 2020 are either to have been affected by a mandatory government shutdown or due to a significant decline in gross receipts equaling 50% or more compared to the same quarter in 2019. For 2021, the mandatory reduction is 20% compared to the same quarter in 2019. A final qualification was added for businesses that began after February 15, 2020, called Recovery Startup Businesses, and they are qualified for third and fourth quarters 2021 automatically. The ERTC is available for certain employer-paid healthcare costs and wages that were paid between March 13, 2020 and September 30, 2021. And as mentioned, Recovery Startup Businesses can claim the credit wage qualified amounts paid July 1, 2021 through December 31, 2021. Although this credit is a great option to help hurting businesses, the IRS states they have a major concern about abuse and fraud regarding the tax credit. A large concern that is currently being discussed by Congress, the IRS, and the AICPA is that millions of businesses are being targeted by companies who are looking to assist them with claiming the credit. I personally have seen posts and emails that say all businesses qualify, which is not true. And many of the companies assisting businesses claim the credit take anywhere from 10 to 25% of your credit. So if you claim the credit when not entitled to it, or more than you should, you could be paying a fee that is much more than it should have been. If you are depending on a government shutdown to prove your claims each quarter, you must be extra diligent in proving you qualify. Unfortunately, the qualifications for ERTC can be easily misinterpreted, which is why you should use the following factors when trying to determine if you qualify. Government shutdown test. First, did your business cease operations in full or part due to government orders that disrupted more than a nominal portion of your operations? The term nominal is defined as at least 10% of the total gross receipts or 10% of the total employee hours that are associated with the operations that were shut down. The information is measured from your 2019 gross receipts and employee hours. An example is a restaurant that had to cease indoor dining, and this aspect of the business made up at least 10% of the revenue. Even if it was able to operate through delivery, takeout, or drive-through, the impact was enough to allow an ERTC claim. Supplier and supply chain shutdowns. There have been many ERTC providers telling industries that they qualify for the government shutdown test due to not getting all of their supplies during COVID. However, there is a specific criteria that first must be met. If a U.S. governmental order causes a supplier to suspend its operations and the supplier or suppliers are unable to make deliveries of critical goods or materials, and the business is unable to purchase critical goods from an alternative supplier. Just because your usual supplier had to shut down doesn't automatically allow you to claim the credit. You must not have been able to get the goods you usually sell from any supplier in order to claim the credit under this qualification. Keep in mind that if your operations were not affected for the whole quarter, you may only claim for the dates you were impacted. For instance, a client of mine was able to reopen its indoor dining on June 15, 2021. So for the second quarter 2021, they could claim April 1st through June 14th. Aggregated groups. If you operate more than one company with the exact same common ownership, those businesses are considered aggregated. You must determine if you qualify for ERTC based on the information of them all reviewed together. You must use the following criteria to determine if the aggregated group qualifies. A significant decline in gross receipts can only be considered on a combined basis. This includes any revenue from aggregated businesses, regardless of whether those other businesses have any payroll. The government shutdown test specifically whether a government shutdown affected more than a nominal portion of the business, must be considered across the entire aggregated group. A single business in a large aggregated group might have been suspended by a government shutdown order, but the aggregated group will only qualify if it can prove that the shutdown affected more than a nominal portion of the entire aggregated group. You must review your average full-time employee count to determine whether an aggregated group is a small eligible employer for the purposes of the ERTC. To be able to claim the credit on all wages, regardless of if the employees worked for compensation or were paid even though they couldn't work due to COVID, you must have had less than 100 average full-time employees in 2019 to claim ERTC for 2020, or under 500 to claim for 2021. If you are contacted by someone saying you qualify without them reviewing your information, please be skeptical. There are many ERTC providers aggressively advertising and approaching businesses without knowing all of the company's information. I have been helping businesses claim this credit since it became available, but we don't charge for our services until we have the information we need to see if a claim is supported. And we also only charge a flat rate, not a percentage of your credit. So you will keep more of the money you receive to help your business with the cash flow you need. I also have recorded video tutorials that show you how to claim the credit if you want to do it on your own. Those are available at no cost to you, and they can be found on my YouTube channel. Search my name, Candy Messer, or hashtag BizHelpForYou. Whether you file the claims on your own or use a company like mine to process the forms, make sure you qualify based on the guidelines. Failure to do so could result in penalties and fines once the IRS completes an audit and finds the amount claimed was not deserved.